Let's drill down deeper with our own Steve Leisman. Steve, how strong is the consumer? Is there any concern that inflation is going to be an issue and that wage inflation won't keep up with inflation?
Sure, there's concern. I think that the market may have gotten a little bit overly spooked by the Walmart Target report, and then a bunch of economists sort of stepped up and said, wait a second, it's not as bad as all that. Some softening is expected, but, I think one of the economists I quoted said, the death of the consumer has been greatly exaggerated, something a phrase you played with a little earlier, Melissa. I mean, I can give you the good side and the bad side here. You got waning fiscal support. That's definitely an issue. Wages in general, specifically, have not kept pace with inflation on an average basis. You have a negative wealth effect, and you do have those savings rates coming down. But there's a whole other side to this story, which is ridiculously high savings rate. In fact, I believe I brought along a chart to show you household liquid assets, and they are running, at least by the end of 2021, we'll get new figures next month. There it is. See that blue line sticking up there? That's above the trend. That's $4 trillion above the trend. Now, some of that may have been worked out, but there's a boatload of savings out there with which to continue spending. The other thing, and it's a little hard to explain, Melissa, but let me see if I can do this. The total wages paid to workers the increase is running higher than inflation. I'll explain that. In that we brought in some 2 million plus workers into the workforce. They were not being paid before. Now they're being paid. So the total wage bill to workers is up about 12%. So I don't ever talk about stocks, but I am interested in a couple things. You guys, and I mean that generally, you bid up Amazon all the way to the stratosphere, and now it's come down to where it was before. So it strikes me that that may be overdone there. I think Amazon's going to walk away with at least something of a better market share than it had. But Walmart, same thing. So I don't know. I think what you have is you got margin compression because margins have been ridiculously high. That's the output end of things. That's the earnings side of things. But you still have a decent consumer, at least for several months, unless the economy does indeed take a downturn and start to contract. Then you'll have layoffs and a problem.
It's like the tail wagging the dog, though, because, everything is fine right now. I mean, Amazon, let's take the Amazon example. Since you're going to come onto this show and offer your stock picks at this point, Steve, Amazon is dealing with a lot of wage increases. No, I'm poking fun at you.
Sure.
But fuel costs,
right, you should.
Interfering with margins. And at some point, all of this weighs on companies to the point where they start retrenching. And we heard that, for instance, there's a story about Sequoia Capital sending out, having a Zoom call with all of their founders and their portfolio companies saying, you know what, do the exercise now. Do the cut exercise now, because you may have to do it within the next 30 days. Be ready for that.
Yeah.
And we're hearing this anecdotally, granted, but it's adding up.
Look, I mean, here's the deal. The weather forecasters forecast rain. We know it's going to rain. We know there's going to be some softening. We know, for example, the goods sellers benefited from people being at home and not spending money on services. There's going to be some softening. So the question is, the market seems to go back and forth between saying, it's going to be a hurricane or it's a hurricane right now, to, maybe just a line of thunderstorms coming through. And I think that that's probably more like what's going to happen here, is that, first of all, you have this shift, Melissa, from goods to services, and that's going to be a big thing. You have people who are, going out to on trips and doing things, concerts and restaurants they didn't do before. So that's taking money away from these goods producers. And the trouble is the market thought that the pandemic era spending was going to be around forever. So they bid up Peloton all the way, right? And then what happened there?
Steve, it's Karen. Let me just get back to what seems to be the central question for me about the markets, which is, what do you think is going to happen to inflation, and where do you think the Fed needs to get before they put on the brakes?
Well, I'm a little more pessimistic on this. I think the Fed may have to go a percentage point, may have to go to 3.5, may have to go to 4 before they put the brakes on. But look, it's not quite a day-to-day thing, but it's a month-to-month thing. The Fed needs to get a lot of help. I really cannot tell you, and I think that's the most honest I can be, what's going to happen to these supply chain issues. What's going to happen with Ukraine? I think it was Nigerian who was saying earlier, if this Russia thing goes on for longer, then that is, I think, an accurate comment there. That's going to really hurt the consumer. Those are things that, and the China lockdown, those are three things I'm watching very carefully. The other element, of course, is wages working through to inflation. So the Fed's going to need a lot of help here if it's not going to go to 4. I think 3 is where the market is priced. I'm afraid there may be another percentage point in there if the Fed doesn't get any help.
Steve, thank you. Always great to speak with you. Steve Leisman.
See you guys later.
The devil's in the details, or in this case, in that extra 1 percentage point, Guy, because that could make a big difference in terms of where the market should be.
I agree with that. And where they're not getting help, them being the Federal Reserve, is in the form of energy prices, which Pete brought up, Tim brought up, and I think they're 100% to bring it up. They are resilient as can be. Crude oil had every opportunity to break down a week and a half, 2 weeks ago when it was flirting with $93. It didn't do it, and now we find ourselves north of 110 again. And I think there's another leg high here, especially just one more time. If and when China does release the zero COVID thing, that headwind is going to become an extraordinary tailwind. So the energy play is intact. That's what the Fed is up against right now, and they're not winning that battle at all.